Hey everyone, really quick video this week, I promise. This week's theme is Wagon Wheel, and the reason for that, and the song is Wagon Wheel by Darius Rucker, and for those of you that are old enough, might remember Darius Rucker from Hootie and the Blowfish, which was also pretty good. I'm primarily a rock and roll guy. Obviously, but I like a lot of different genres. There's some good country music. And Darius Rucker, this song it's really good no matter what the genre is. It's just a good song. Give it a try. But yeah, it kind of fits with this idea. We've had just a lot of rotation underneath the surface of this market, even though S&P 500 still looks pretty damn good. Some of the other indexes have been really unhealthy. And we're going to talk a little bit about some of that this week. What else? The thought of the week, always iterate and improve upon your edge. Very simple, but very, very important. Very, very important. That's what I'm doing every single week. That's what I'm doing by doing these videos. Everything I do is trying to improve upon my edge. It gets into another topic a little bit. A lot of people talk about psychology in trading, and not that it's not important, but your edge is more important. You could have the best psychology in the world. If you have no edge, it doesn't matter. Like, you can do all this meditation, Wim Hof breathing, do whatever you want. Do any of that. I mean, take shrooms, do anything. None of that's going to help if you have no edge. You have to have the edge. Too many people focus way too much on psychology, I think, in trading. It's not that it's not important, but it shouldn't be your primary focus. I mean, I do a lot of those things other than the shrooms part. I do a lot of those things. And I think they help, of course, but you got to work on your edge. Really have to craft that edge. So what's this? Russell 2000. Again, we're looking at the rate of change, 50-day. Pretty rare for the 50-day rate of change to get over 20. And it has multiple times recently. So we're going to look at the back test of that. You have to go back quite a ways to see other times it happened. Back in 2009, it happened several times. It's not a real frequent occurrence. The other thing is the 5-day rate of change, -5 or less, happens a lot more often. But I want to look at periods where we had a recent, within the last 50 days is how I looked at it. Rate of change 50 over 20, followed up by a rate of change 5 -5. We'll look at that back test as well. So here's the first back test. The Russell, here's how the Russell did after the 50-day rate of change was greater than 20. It did very well. Did better than S&P 500 even. I forgot to turn on my, let me turn on my thing real quick here. Got to have my drawing thing. Okay. Yeah, and just versus S&P 500 right here. And it did very well. I mean, it's a very bullish back test. So I guess starting to think about, will the Russell continue what it's done? Will it continue to outperform S&P and even NDX? I think this is just one of many things you should be looking at if you want to determine that. I still don't know where I stand on that. I need to do more research, but this is one part of the research here that I'm sharing with you guys. So here's the second back test I told you guys I was going to do. 50-day, greater than 20 within the last 50 days, followed up by the 5-day less than equal to -5. And Russell did pretty good after that as well. Next, 3 more back tests. This is the Russell after I know this looks complicated, but all this is the 20-day rate of change for Russell was in the 95th percentile compared to the Nasdaq rate of change 20-day. So in other words, the Russell has strongly outperformed the Nasdaq in the previous 20 days. And you can see we've seen this a lot recently. There's only 433 samples on this, and we've seen a lot since basically June of last year, especially since November of last year. It's really been something we've seen a lot of. How has the Russell done after it's basically kicked Nasdaq's ass? Not all that well, historically. However, I mean, and also against the S&P 500 hasn't done that well. However, if you would remove a lot of these duplicates, there's a ton of these that printed 99 and 2000. So maybe this is a I'm throwing a bone to the perma bears here, I suppose, with this back test. A lot in 2001, 2003, 2008, we saw it a lot, and we're seeing it again. It's kind of a strange thing we don't see a lot of. I'm going to show you the chart of Nasdaq Russell SPX Performance here in a minute. You can see that Russell does have periods where it outperforms, but long term it has outperformed Nasdaq for sure. Is that changing? That's what we all need to figure out. I'm not sure. I'm not sure. I've seen some good arguments both ways. It's something I want to do more research on. Next week there's no video, so I may have some more time to really dive into this idea and figure out where I stand on it. I would say I have to lean towards I have to lean towards Russell. For maybe the next year, maybe 2 years, I do think it's going to outperform Nasdaq, based on what I know now. But I need to do more research on that. However, in previous videos, I was talking about how maybe Nasdaq was a little bit ready for a counter trend bounce in this idea, and we've definitely continued to see evidence of that. But this is longer term. Will Russell continue to do what it has been doing since basically October of last year? Will that continue? That's what we're trying to figure out. Same back test here, but this is how Nasdaq did after we saw Russell outperform. Nasdaq didn't do well either. How about the S&P 500? It didn't do well either. But again, a bunch of year 2000 prints. Now, this is the Russell 2000, Nasdaq, and SPX all on one chart, and we're looking at percent for our scale. They're all on the same scale, and they're all in percent. Blue is Nasdaq, red is Russell, green is SPX. And you can see most of the time, and I have, about an 8-year period here. I guess that's more like a 10-year period. Let's zoom in a bit. Let's get like a 5-year period. So we're going through most 5-year periods here. Nasdaq has outperformed. However, you get into these periods where you can have fairly long periods where Russell outperforms. From 2000 through 2006, Russell outperformed. It outperformed from 2003 to 2008. But Nasdaq, again, outperforming. So you had that one period where Russell did extremely good and outperformed. And I believe if you go in kind of a smaller window here, after 2009, Russell at least did quite a bit better than S&P 500 after a major low. And the same after the 2003 low came in. So after major lows, if you consider 2020 a major low, I mean, I know it's disputable. Russell can outperform after a major kind of generational bottom comes in, and we've seen that. Do you consider March 2020 a generational bottom? I don't know. It happened so fast. But there's a lot of things like dark pools and COT that happened that looked very similar to 2009. So there is that. But if we're starting a multi-year period of outperformance, it's only been going since November. So there could be a lot more potential here. I know the reasoning is reflation and reflation rotation. I mean, that could be a reason. I'm skeptical that we're going to get strong inflation. With the amount of debt that's in the system, I'm very skeptical we'll ever get extremely high inflation in this country. I think maybe a bigger factor is just the fact that Russell has been beat down for many years and has underperformed, and maybe now it's its turn. There is some decent value in Russell, although there's a lot of stocks that valuations that really don't make much sense after this rally. But that's valuations, and valuations haven't made a lot of sense for a lot of years. So yeah, that's where we're at on that. Let me know what you guys think, because I'm still not sure where I lean on this. Back into the metrics. Did some pretty good prints last week. Monday and Tuesday not too hot after the initial rally. We went down and tested the 50-day and then bounced. And one really nice thing to see is that Friday bounce. We did see a pretty good print, although it was aided a lot by Tesla, I think. Hedge fund exposure. Part of the reason in my probabilities, I think S&P still goes over 4,000 before we get a bigger potential pullback, is because there's still those elements that have yet to get long, and I've showed that in previous videos. We're starting to see VIX finally close under 20, so I think you may see this creep up considerably if S&P 500 breaks 4,000 in the next few weeks. COT dealers, pretty big drop this week, but still overall still relatively high when you're in this range compared to where it can get. So it's not a huge concern. You'd like to see it stay high, but I think part of this we just had a rollover to on the futures, so it can cause weird things as well. And I'm going to show you the open interest next. Oh, open interest. I was going to show you that. General open interest, the textbook, which I don't always trust the textbook definition of things because many times they're wrong when it comes to trading, but the general rule of open interest is if you have an uptrend, open interest should be rising with the uptrend to confirm the uptrend. And we've had open interest kind of falling really since the March lows came in. I don't put much into it, but I think a lot of this recent loss of open interest is attributed to what's really been happening under the surface. S&P 500, if you look at the S&P 500 chart, it looks like nothing's happened. But under the surface, there's been some growth stocks get absolutely hammered. So I think that has shaken some people out of positions. In general, I view open interest as when you have a fairly significant drop in open interest, you have a lot of people out of position, and essentially you'll have a lot of futures accounts with a decent amount of cash. So the next break, either way, you may see some of that cash come in and the open interest increase. We just had a futures contract expire, so this naturally is going to come back up, but how fast it comes up, that's what matters. I've never seen a whole lot of people backtest futures open interest, so yeah, and I haven't either. So I don't know really what use it has. It probably does have a use though. Despite the dealers dropping, commercial positions rose pretty high this week. So asset managers bought quite a bit while dealers were selling. And I'll show you this. This is just SP 500 consolidated, so minis and full contract. You see the dealers selling longs and asset managers adding to longs. Dealers also sold some shorts. Open interest decreased. So, I mean, asset managers are considered, these two here are your commercials category. But and they both, in general, are not like something you should fade. You don't want to be a contrarian to both the commercials in general, but the dealers are the better category to follow, I have found through testing. So COT is mixed this week. I'd like to see dealers adding 2 positions, but we did see asset managers add a lot to positions. And keep in mind, COT is from Tuesday's close. Quite a bit happened since Tuesday's close. So next week's report, depending on how volatile this coming week is, may give us a better picture. This was last week's probabilities, and really, I'm not changing it much. I don't see a reason to change it. It's so far held up pretty well. We went down to the 50-day. We wicked through it briefly, and as long as we can hold up through the end of March, which I think we're looking pretty good on that, I think April could be very good for the bull case. We've had, under the surface, there's been some washout. I know it's not been a complete washout. You don't need a complete washout. So yeah, let's look at, I decided to draw some longer term probabilities on a chart. It's kind of messy, but this was last week. Came down, wicked through the 50, and that big ramp on Friday. So far we're looking pretty good on that idea. These are some scenarios I kind of drew out. Longer term scenarios. Trading is kind of like inverse the weather. That's kind of how I like to view it. So short term, I think, can be a little bit difficult to predict, but longer term, I think, is easier to predict. Like, I think longer term, when you're talking about indexes, there's a high probability will be higher prices by the end of the year, and then next year will be higher, and so on and so forth. That's fairly high probability. But the day-to-day probabilities, I think it's like a 53% chance of a day being green on S&P 500. I have the stats on that, and I'll post it for you guys on one of these videos. But whereas the weather, if you go outside and it's sunny and you see no clouds rolling in, you could say, well, 5 minutes from now it's probably going to be sunny. It's a little harder on markets to say that. And this is why I focus on the higher time frames. Markets, any random thing can happen and cause just a random spike. So yeah, it's inverse the weather. I mean, maybe you guys disagree. If you're a day trader, you probably disagree with me on that, but that's kind of my view. So the 4 scenarios are this. Blue is my probability from the prior page. We break 4K, maybe get as high as this 4,200, and then pull back. And I think there's a really good chance that we don't have much left. And then we have sideways through the summer, through the weaker seasonal months, and then we finish the year strong. I put that as 45%. The purple, we don't break 4K, and then we just range sideways like we have been all summer in the year strong. And this blue and purple both of these would fit fairly well. Blue would fit the best with the 2010 analogy. 2020 really does line up pretty good with 2009. I've shown that before. So there's a decent probability that we could follow kind of a 2010 type path with either blue or purple. Green would be a 2017 type scenario where we have minimal pullbacks and just keep grinding higher. I think that's only about a 5% chance. And red would be a bigger pullback with very high probability, only about 5% chance. And you'll notice this doesn't quite add up to 100% because there's probably thousands of other scenarios out there, and you got to account for those too. They fit in there somewhere. Of course, I should draw the You always have to have the that, because every perma bear draws that on every one of their charts, and it should be red. It's got to be red. Have to have that one. And then there's a few people that think we're going to do this always as well. There's a guy on Twitter that's always predicting a 1,000-point quarter for the S&P 500, which I mean, you can have that after a big washout move, but after you've had a huge run, unlikely. So those two, each less than 1%, probably less than 0.1%. Okay, so I got 10. Was it 10? Yeah, 10 followers, and I had 5. So I got to do 50 push-ups. So we're going to do a 1 to 5 again. See how many push-ups I do for the next set of followers. 1. Outstanding. Finally, some RNG worked in my favor. Okay. Genres of music. I talk about music all the time for some reason on this YouTube. Number 1, rock. Number 2, blues. And then my third favorite genre, I could throw a lot of things in there. I listened to a country song earlier. There's a few country. I'm selective with country, but I do like a decent amount of country. Obviously, Johnny Cash, Garth Brooks, Darius Rucker. I really don't like that one song of his. Travis Tritt, A Great Day to Be Alive. That's great. I love that song. I listened to it. I listened to it today a couple times. Really good song. Alabama, like it kind of almost fits in like a southern rock type of genre, but it's country. Alabama's really good. Yeah, there's quite a bit of others in the country genre. Bluegrass is kind of a strange genre, but there's some really good songs in there. Very selective of what I like in there. Yeah, there's this band called the Dead South, and Hell I'll Be in Good Company. That's our like top song. Check that one out sometime. I'll probably have that as my song one of these weeks. Like other genres, like rap's not high on my list, but some of the rap from when I was younger, yeah, I'll listen to it, like Snoop Dogg, Dr. Dre, those sort of things, just because it's, I don't know, brings back memories, I suppose. Yeah. I like a little bit of techno, actually. I know that's strange, but somebody that likes rock and blues also likes techno. Seems pretty strange, but sometimes when you're trying to focus and do a bunch of things, like market research, get some like dance, techno music going. That's pretty good. Those are my genres. Let me know your genres. Beer of the week, Boulevard Tank 7. Very good beer. I think that's it. Let me know what you guys think. Later.